Good evening, everyone. This is James from Dividend Stock Talk, where we talk about dividends, dividend stocks for monthly cash flow and weekly cash flow. Every week or every day, we are looking at stocks that you can invest in, earn a little bit of money, move on to the next one. Now, I've created some software that helps me do this. You can get access to the software by being one of the members of our 10-minute trader. You can go to 10minutetrader.com, find out, sign up, and find all the information there. Sign up there. We're just going to jump right in to 9:30, Tuesday, August 15th, and let's get started. Okay, all that being said, today being the 15th, 10 days from today, because we're always looking at stocks 10 days in advance. That way we know what is coming up in the next week or so for us to invest in. Now, I want to tell you, first off, we look at 5 different trading strategies: buying the stock, buying certain time, doing certain things, and even options. So find out what works best for you and stick with it. Don't jump around like I do, because I'm basically doing this as teaching. Find whatever works for you and stick with it. Get good at it. All right, that being said, now that you're all utterly confused, because I'm confused and I said it. All right, let's jump in and see what we're looking at. All right, this account is let's get things set up a certain way. Oh, this is our what do you call it? Our dividends with options. Okay, let me briefly explain to you what we do here. Now, dividends have a tendency to make a stock do certain things. At a certain time of year, every company that pays out their dividend, not every company, but a lot of companies, when they pay out their dividend, they let you know ahead of time by putting in the dividend calendar and informing you of when they're paying their dividend. I think there's 4 dates you need to remember when it comes to any dividend stock, that company that's paying dividends. The 4 dates are the announcement date. That's where the company announces what they're actually paying, what the earnings per share was, and how they're going to disperse all those earnings per share to all the investors. Second date to remember is the dividend date, or the EX date. The EX date is the day, is the last day the stock trades before they pay out their dividend. The third date to remember is date of record. Okay, it usually happens 2 or 3 days after the EX date. That is the day that goes on record, or it's recorded, or you're a registered owner, or however you want to word it. It basically is exactly what it says it is, the date of record. Whoever owns the stock on this date is the registered owner, is the person who's entitled to capture the dividend or get the dividend check sent to them, get extra shares, whatever, the registered owner. And now, to be a registered owner, you have to own the stock for a minimum of 2 days to go through what is called settlement. So you buy the stock, you have to wait for it to settle, or you wait for the settlement date, or the settlement transaction, or the settlement period, whatever you want to call it. Usually takes 2 days, 2 to 3 days. So that is why the EX date, the last day the stock trades, is 2 days before the date of record. All right. Fourth date is the payment date, where you actually get paid, or actually the day they write the checks. So quickly, 4 dates: announcement date, EX date, date of record, and payment date. There you go. So back to what I was saying. This account that we're going to look at now has to do with options, because I have found in my over 20 years of trading that dividends, along with other events create turmoil or create movement in the stock. Something happens, the stock reacts in a certain way. Good news, stock goes up. Bad news, stock goes down. News is an event. An event is an event. Okay, an event. It could be anything. It could be a lawsuit. It could be a promotion. It could be a surplus of cash. An event is something noteworthy happening in the company. Other events. Christmas is an event. all the other holidays or events. 4th of July, last day of school, first day of school, New Year's, Valentine's Day, Easter. Every event, some directly correlate to making something happen in the stock market, and some of them don't. Okay? I'll give you an example. Hershey, which is HSY, Hershey stock or Hershey company, has a tendency to move up. The stock value increases in the second week of February. Yep, second week of February, July, second week of February, that's Valentine's Day. And what comes right after Valentine's Day? Easter. It's kind of like the two major chocolate holidays are right after, one after the other. First week, second week, third week of February. Has a tendency to make the stock move up. Okay, fine. Now, the stock moves up. Hershey stock has, in fact, moved up every year for the past 12 or 13 years, right around the first and second week of February every year. And it just so happens that's a great time to buy. And if you create some software like I did around events that have a tendency to make stocks move, then kind of gives you an unfair advantage. I'm rambling on, not really talking about anything, but back to this account. This account is our options account, where we look at the EX stage and then we figure out, using the software, which, like I told you before, if you want to get hold of the software, you have to go into the 10-minute trader and sign up there. Shows you what the stock has done in direct relationship or direct correlation to the EX date or the dividend date. Okay. So this account is options account, so we buy it just before the EX date, 10 days prior. That's why we're looking at 10 days, and then we find out what is going on, and we do certain trades a certain way based on the dividend coming. All right. Today was Tuesday, right? It was Tuesday? Yep, Tuesday the 15th. We're actually up 1,600 for the day on Colgate-Palmolive, which is a good thing. Now we do have, let's click on here to see what our position is so I can speak more eloquently. All right, Colgate-Palmolive, we have 5,000 shares. We bought them at 74. This week we sold somebody the option to buy them from us at 74. I bought them at 74. I sold the right for someone else to buy it from me at 74. So, as you can look at by the dates, July 1st, and now we're into August 9th. Do the math. That is 6 weeks. 6 weeks we have owned Colgate-Palmolive. Now, interestingly enough, let me pull up my calculator, my calendar again. All right. Monday, which was June 26th, we created a trade with Colgate-Palmolive because we knew the dividend was going to be paid, or the EX dividend date was going to be, what is that, the 10th of July. Okay, so we wanted to be on board with that. So we bought a 74 and a half debit spread. And what happened, the stock closed below 74 on Friday. So right around 3:30, 4 o'clock, just before the market closed, we took a look at it and we figured out the best calculated investment choice would be to buy back the put, or buy back the call that we sold, and then taking ownership of the 5,000 shares of Colgate-Palmolive. All right, so that's what we did on the 26th. So on the 30th, when the stock closed below what we wanted, below our target price, Saturday, which was July 1st, we became the owners of 5,000 shares of Colgate-Palmolive. Now, we saved a little bit of money on buying those shares because it did, the stock did close above 74, but below 74.50. So we bought the 5,000 shares, and now we still own them. So we had 1, 2, 3, 4, 5, and now we're on to the 6th week. All right, so the first week, the very first thing we did is we sold a covered call, and I believe we got $2,600 on the first week that we had Colgate-Palmolive. The second week, we collected the dividend, which I believe was 55, 60 cents, something like that. It came to like $2,400. And we also sold another covered call, and I believe we got $2,100 on this. So we got $2,100 on the covered call and another $2,500 for the dividends. Okay? So you following me so far? So we bought it on a deal. We bought it below 74. No, wait, we bought it. Anyway, we bought it at 74 because of the move we did here. Okay, first we got 2,600. Second week we got 2,100 for the covered call, and we got 2,400 for the dividend itself. And the next week after that, I believe we only got like 1,500 or 1,600. And the next week after that was only like 1,000. And then the first week of August, I think we didn't do anything. Yeah, that's right. We didn't do anything the first week of August because it just wasn't financially feasible for us. And this week here, I think we only got 1,100. And that's where we are. We actually sold a 2-week option for 1,100. So that's where we are today. So this is 20, 26, 21, 24, 16, 14, that's 2, 4, 6 and a half, 7, 8, 9. So we got like $9,000 or $10,000 since we've owned this dog. And hopefully we'll be out of it by this Friday. So it's at 71.80 now. It's got to go to 74 or above before we're out of it. Does it look like it's going to go that far? I really don't know. I mean, it's only a one, not even a one, it's like a 0.5% move, really. Or is it? I don't know. 1% would be 70 cents. Ah, okay. So it's like a 3 or 4% move that's going to make. It can do it. I don't know. Who knows? Today's Tuesday. She's at 71.80, close to 72, 73, 74. Yes, it feasibly could do 74 by Friday. Anyway. All right, that all being said, let's see what else we're looking at this week. August 15th, so we're to the 29th. QCOM, we looked at them. Now they're paying out a 50-cent dividend. Let's see where QCOM is today, because I'll let you know what I told you about on Monday if you didn't have a chance to take a look. If you didn't see the video for Monday, this one looks pretty good. All right, Monday, oops, here we go. Monday she opens up at 53.05. Is that right? No, 53.04 she opened up. And she closed at 52.92. And the option spread that we said to get, or that I would have gotten, was the 52, 52 and a half, which way into the money now. Okay? Let's see what it looks like. CL. All right. Wow. Got to do the right company first of all. There we go. 52 and a half. There we go. Now remember, it was only 33 cents that we bought. That we would have got it for had we done it that day. All right. So 40 cents to sell, and it's worth 54 to buy. 48 cents if you want to buy another one. Ooh. Okay. So that one's up nicely. Thank you very much. Let's jump out of there and see who's next on the list. So QCOM is going good. What did we look at here? This was yesterday. UNP. We didn't do that one. We didn't do this one. We only did 2 or 3 of them yesterday, and I don't remember which ones they were. Bummer. All right, Wednesday. Here we go. We got quite a bit to look at today. TSN, Tyson Foods, we've heard of them. Pepsi, McKesson. See, I really don't know who McKesson is. I mean, I've never heard of them. I mean, I could do the research on them, but I'm a numbers guy. I like strictly numbers. Mickey D's, everybody knows McDonald's. Lockheed Martin, ooh, $1.82. That's a nice dividend. Okay, Juniper Networks, 10 cents, kind of borderline. HIG, which is Hartford Financial Services Group. BAX, which is Baxter International, no idea what that one. And then, of course, Bank of America. All right, so let's quickly take a look at all 9 of these and see what they look like. All right, TSN. TSN's all over the map. Check this out. All right, she opens up the year at 74, hits a high of 75.60. Over the next few months, she drops down almost like a rock. I mean, that's, floated down. How's that? To 55.85. So she goes from a 77 high to the 55.85 low within, that looks like 2.5 months, 3 months. Okay, from the low of 55, she jumps up to a trading range of 62. She trades in trading range of 62 for about 5 months, drops back down in the 50s, trades for a couple of weeks that way, and then a couple more weeks up to the 62 area again, and right where she is now at the 65.96 area. So Monday and Tuesday don't look like happy days. Last week, she opened up really high on Monday, dropped down and hit up another high. Oh, could be a way to go, I guess. Sorry about that. TSN. Let's quickly look at TSN. TSN. Tyson Foods. All right, 65.96. Ooh, now this looks like a nice number. All right, let's quickly check the seasonality, see how that looks. Come down here, open up the seasonality, take a look at that. Here's where we are. The blue line represents what the move is currently, and this is the historical performance. Now I have my mindset, my platform, or my trading thing set for 10 years of data, so it's all 10 years of data. Let's see what she's doing, or what we can expect her to be doing. All right, here's where she is. She looks basically like she's going to go sideways. Okay, beginning of next week, drop down. Okay, so we could feasibly buy it and then be back out. It's almost going to be the same tomorrow morning. Yeah, might drop a little below. Okay, so this could be like a tough call. Based on this chart, it's a tough call. Based on the other information, it's a good call. All right, now let's take a look at this. Bring this back to the regular chart. Here we go. All right. Now, if we get filled at the 38, we can look at a little less than 30%, because it could be 1,981 to make this trade, and the maximum we can make is 600. 600 is roughly a little bit less than 30%. So it could be 28%. 28% is not bad for 3 days, because you're looking at Wednesday, Thursday, Friday. That's it. You can make 28% Wednesday, Thursday, Friday. So you would be buying the 65 call, and then you'd be selling the 65.50 call. So that 50-cent move, and you'd be paying 38 cents for that. So you'd be making, like I said, right around 27% for 3 days, Wednesday, Thursday, Friday. Now, if the stock goes up, you make your 27%. Stock goes down, yeah, you can go down quite a bit. You can be down all the way to 65.30 to be, that's break even. Anything below 65.38, you start losing money. Okay, and you got $1,900 up for up on the chopping block, so to speak. All right, so as long as this stock closes above 65.50, which is right here, you can make it 27%. Right? Stock goes up, make money. Stock goes sideways, stays the same, make money. Stock goes down a little bit, you can still make money. I like these kind of trades. So I'd put the 19, that's almost $2,000 up. I would put the $2,000 up to go for that $600 return, which, like I say, it's 28%. About 28%. All right, not doing that one. Let's go back. The next one on the list is Pepsi. Pepsi Cola or PepsiCo. PEP. All right. Pepsi going sideways in a trading range right around 107. Drops down to 101 for a couple of weeks. Makes a low of the year at 98. A little bit up and down action going here, but basically staying in a $104 area. And then over the last 7 or 8 months, slowly going up until she makes a trading range for about a month at 117, which is where she is now. It's 117, 118. So Monday and Tuesday, so Monday, Tuesday, 2 big days, and I don't know what. Oh, it could be because the dividend's coming up in the next 10 days. Yeah. All right. So you get dividend in the next 10 days, and that's lovely. So it is an all-time high or a 1-year high at 119. So let's take a look at the numbers and see what we're looking at. 119. We look at the 118 right there. Okay, 12 cents. That's not a lot of money. All right. So let's see what we're looking at. All right, we make $600 off of a $4,400 investment. This is where I'm going to say no. Okay. I mean, is it 10, 15? It's like 12%, something like that. Because 10% would be $440. Yeah, so she's about 12%. So if you want to do 12% for the next 3 days, Pepsi is a great company. Don't get me wrong. I mean, we did an analysis between Coke and Pepsi, which is the number one against the number two, and Pepsi is you get a higher return on your money. They paid a better dividend, but they are number two. Coke is number one for a reason. They've been around for over 100 years. They are a dividend king. They've been increasing their dividend payments for more than 50 years consecutively. So but anyway, number two, Pepsi. It's a great investment. It's a great company, but I would pass because you're at the all-time. This is why I would pass. You do what you want to do, and I can't tell you what to do. She's at a high for the year, so let's bring this back. Oh, let's get out of that. Okay. You get the low of the year here, the high of the year there. So you're basically at the high of the year. This is the highest Pepsi has been for 12 months. Okay? Now you're trying to go higher. Territory you've never been in before. Not what I want to do. So that's why I'm going to pass on them. And to be totally honest, let's see what they look like seasonality wise. Yeah, she's looking at a downturn. See where she is now? This time of year, slight downward trend. Strike number 2. So we're not going to take our Pepsi. Sorry, guys. All right, standard, back to market watch. So we just did Pepsi. Now let's do McKesson. MCK. All right, McKesson starts out at 196 over the next few months. That's funny. 197.08 is the high for the year. 2 months later, the low of the year, 114. Okay, 197 to 114. That's almost like an 80% decrease. Is that right? No, I wouldn't say 80. You're going from 196. What was that, 197? Yeah, 197 down to 155. Yeah. All right, 197 to 155, that's 40 points. 40 points off of a $200 stock. That's 25%. Okay. So she drops 25% in 2 months. That wouldn't make me a happy camper. All right, she goes from she jumps back into a trading range of 143. She trades for about 6 months there, makes a small jump up to 163, trades there, and now she's in a downtrend. Downtrend, you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 down days and 2 up days. Wow, that's gonna suck. Sorry. Less than desirable. That better for you, those tender ears. All right, so she goes from 197 at the beginning of the year down to 149, where she is now. These numbers don't make me look a happy camper. So let's see what she looks like seasonally, what she normally does this time of year. What does she normally do this time of year? Oh, look at that. Nope. Sorry, McKesson. Mickey D's. I didn't even look at the numbers because MCD, McDonald's. All right. McDonald's starts the year off at 118. Two months later, she's down to 110, which is the low of the year. Then over the next 9 months, she jumps up to a trading range of 152, where she kind of is now with a high for the year at 159. That's like almost like 160. And now she's at 157. So, what can Mickey D's do for us? Let's check and see the seasonality to see what it normally does during this time of year. All right, downtrend. Damn it. Check out the numbers. I don't know why. Downtrend means ain't worth diddly. Put us back to standard 157. She's kind of high to the high of the year. All right, 157. All right, right there. That's a $2.50 spread. So we can get 51 cents. Let's see what kind of return that is. Wow, that's 25%. But I can't do 50 contracts, so look at that big chunk. That's 10 grand. 25%. Hey, it's McDonald's. McDonald's is a great company. They've been around for years. You know, they ain't going anywhere, and the advertising it on TV, the constant bombarding. You know, she does well. If you're gonna do good stock, I'm not gonna, diss them, but you're looking at 10 grand to make 2,500. Can't do that. 10 contracts, 2,000 bucks, you make 510. It's still 25%. No matter which way you look at it, 25% is 25%. Hey, stock goes up, you make it 25%. Stock stays the same, you make it 25%. Stock can drop all the way down to 157.50, and you still make it 25%. You know, this could be an uptrend. I mean, the market maker is trying to push it up. As you can see, he opened it up higher Monday than the close on Friday. Granted that she went down a little bit, but then he tried pumping it up again. You know, she closed. Get out of there. Okay, Monday she opened higher than she closed on Friday, so it's a slight. That's the market maker trying to push the value up. Okay, Monday she closed at 157.26, and again the market maker this morning opens it up at 157.84, trying to push the price up. Now, can they continue to do this tomorrow and the next day? Of course he can. The market maker can do whatever he wants. So as long as the stock for this trade stays above 157.50, you can make your 25% in any one of those positions. You know, if stock goes up, make it 25%. Stock stays the same, you make it 25%. Stock can drop, but just a little bit, to 57.50, and you still make it 25%. It's a good trade. Would I do it? No, because McDonald's is in a downtrend this time of year. You know what they say about trends? Trend is your friend, right up to the end. We want it to go up or stay the same. That's what we want, but this one is showing historically she goes down, so we're not going to do I can't say you. I said I'm not going to do it. Lockheed Martin, $1.82 for a dividend. I'm thinking this stock is like a $200 stock. I don't know, but let's check it out. LMT. I'm saying two. Ooh, I was wrong. It's a $300 stock. Okay, so you're looking at 182 for a dividend. Starts out the year at 258. The next 2 months, she drops down to 229, which is only a 10% drop. That's not bad. Okay, from 228 to 229. Ooh, wow. The next 10 months, she slowly climbs up to 306, which is where she's at now. This is nice movement. However, this is the high for LTM, and this is where I usually say no. I say no for several reasons. Number one, it's a pricey stock. Can I afford a whole bunch? No. So, let's see what the options look like. Okay. Okay. LMT. Try that again. There we go. Lockheed Martin. Let's delete that. 306. I could get a $2.50 spread for $1.80. So that could be a decent return. Let's take a look. Oh, you know what I didn't do? All right, here's what the return would be. $700 profit on $1,800 investment. That's more than 30%. Okay? But I didn't check the seasonality of Lockheed Martin. What does this thing normally do? Now that's important. What does it normally do under normal circumstances? Got the dividend coming up in the next couple of weeks. This thing is going to go sideways for the rest of this week, and then slightly drop down going into the dividend. Just to let you know, it's a good trade. You know, it's like over 30%. Lockheed Martin's a good company. She's showing a sideways move tomorrow, which would be here, and then basically sideways for the rest of the week. Okay, remember what we said, the stock goes up, make money, stock goes sideways, make money, stock goes down a little bit, make money. So that's your play for Lockheed Martin, the 302.50 and the 305. You know, for $1.80. Okay, 30%. All right, who's next? JNPR. Juniper Networks. Let's see what Juniper Networks look like. JNPR. Okay, Juniper Networks starts the year out at 23. Goes sideways for about 3 months. Shoots up. I like this. I like this gap up from 23 to 26. You know, it's a little over like a 15% jump overnight. I like that. Sideways for about a month. Climbs on up in the 27, 28 area and trades about 5 months there. She jumps from 28 all the way up to 30. Not liking that, so she comes back down to 28, which is where she is today. Today didn't look like a very happy day. She opened up at 28.02 and she closed at 27. That's like a 60-cent drop. Anyway, let's take a look at the numbers. Oh, seasonality first. All right, here's where we are. All right, I'm not even going to go to the numbers. Look at that. This is where we are. This is what we can look forward to. No, thank you. Okay, JNPR, HIG, the Hartford Financial. HIG. All right, Harvard Financial. Let's take a look. Wow, this is a nice jump. From 40, nothing but up. Oh, she made a quick look up at 43, traded a month right around 43 area. Jumped up again a couple weeks later at the 47 area. Traded, what, 5 months, 6 months at 47, 48. Jumped up at 49 for a month. And from that, she slowly climbed to where she is today at 56.81. Take a look at the seasonality real quick. This doesn't look good because I don't like trading at the top of the market. I mean, that's the highest the thing's ever gotten. But she should sustain this for about a week. Look at that. She goes sideways. However, I don't like trading at the high of the year. You know, because it doesn't, you know, it's the high of the year, right where we are right now. All right, so let's see what HIG offers, you know, for a return. Okay, HIG. Here we go, 56.50. There it is. That's not really worth it. I can tell. 42 cents for you know, for a 50-cent piece. I don't think so. $80 off of a $400 investment. Nope. Sorry. I'm not even going to talk about it. Let's just move on. BAX. BAX goes sideways for 1, 2, 3, 4, about 4 months in the $47 area. Drops to make a month at the 44. From the 44, it's a nice climb over the next 6 months to get up to the $60 area where she is today. Look at these. Oh, I like all this green. Up, 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 up. And we have the dividend coming up in 10 days. So you have 2 days going up, and let's see what seasonality looks like for BAX. Seasonally, this is where we are. Slow decline. I'm not going to bother with that. I don't like slow declines. And last but not least, Bank of America, BAC. Let's check out what they get for us. Okay. Let's go back to standard chart. Let's go back to BAC. Bank of America. All right. Bank of America starts the year at the low of the year, 15. Trades sideways in the 15L area for about 2.5 months. Couple of days, shoots up to 19. 15 to 19, that's a 30% increase. Slowly continues up. Now we're at, wait a minute. The low of the year at 15. That's a 25% increase. Okay. In the 22, 23 area, she trades 9, actually, for the rest of the year, the 23, 24 area. Where she is now at 24.47, let's take a look at what she normally does. Here's what she normally does. Flat, I like that. Flat means it doesn't go up, doesn't go down, it just goes sideways. Let's see what the numbers look like for Bank of America, BAC. All right, 24 and a half. Ain't worth it, 3 cents. That, see, it's cheap, and it's a 24, 24 and a half. However, she closed at 24.47, which is below a half, which means you only make money if the stock goes up, if the stock goes up, if the stock goes up. No thanks. We're going to pass on that position. And that was it. Okay. So I guess that wraps up. Let me check, see if we have any questions. Any questions? Ah, crap. Gotta move it up. Gotta move it on up to the east side, to a deluxe apartment in the sky. No questions, you guys. Come on. You can do better than that. All right. All right, so that's not going to do us any good. Get to the right account. Let's move back to where we were. Seasonality, monitor. All right. So we're not doing too bad with the options. We're still up over 50%. Once we're out of Colgate-Palmolive, we'll probably be at 55%. But I don't know when that's going to happen. So we're going to keep collecting $1,000 every week or every 2 weeks. Keep selling the covered calls against Colgate-Palmolive. And now remember, my main goal with this with this account is to get at least $1,000 a month, $1,000 a week off of that one. And we have been doing that very successfully so far. The other account, let's quickly go there and see what's shaking. All right, we're down 40 bucks for today. DFS went up a little bit. Johnson & Johnson went down. M went down again. You figure Macy's can't go down any further, but look, she's down $20,000 since we opened it, and SKT is down 10,000. Ouch! All right, all said and done, you know, you're collecting quite a bit of dividends with this account. Not where I want to be, but it is what it is. So with that, I'm going to say good night to everyone, and I will see you mañana, tomorrow. Remember, this is James from Dividend Stock Talk. And if you want to get access to the software that tells you how often and what's the best trades to make, you can get that at the 10-Minute Trader, 10minutetrader.com. Other than that, I will see you guys tomorrow.